J-Blog 2009 September 20th. Let's start out today by looking at oil, continuous contract oil. Oil closed relatively high once again on Friday. Friday was option expiry, so that will always affect the market. But oil clearly did not make a new high, and not quite sure exactly what is doing here. Could be a head and shoulder, could be, depending on what's going to happen next, it could drop off once again, show us lower highs. It could be a rising wedge. We'll have to wait for this formation to play out by itself. Natural gas was quite interesting. I must say I'm actually surprised by how close to the bottom I actually ended up buying. I did not expect it to go that high that fast. From 250, this is not quite clear neither, because according to the NYMEX, the actual price of it is somewhere around 350. But this is the continuous contract, and the NYMEX is the future. So I'm not sure. The fact is, it's a lot higher than where I bought it, and of course now I'm sorry that I didn't buy more. I was actually sitting here in the pre-market right here at 250, 240, and I was tempted to buy another piece, and I thought to myself, oh, I'll just give it a few more days and then buy another piece, and of course that happened to be the bottom. So I have a relatively small position in natural gas right now, but it is obviously on the positive side, which is nice. Gasoline showed us a little bit of a bounce here, but has had no follow through Thursday or Friday. So gasoline prices continue on a downtrend for the time being, until we can actually make a higher high. Gold is on everybody's mind right now. Failed to make a new high on Thursday and on Friday, but it has broken recent highs. So let's see where that goes next. One thing that I was looking at is there's a bit of a convergence happening in many of these markets. And I'll get to that in a sec. Just let's take a look quickly at the US dollar index. US dollars right here. The US dollar has broken the lows, and now it's a question, will it turn around here, or will it keep going? Is the US dollar actually doomed, or is this just an undercut that has basically cleared out the shorts, and now the dollar has gone from weak hand into strong hands? We're not quite sure at this point. We'll see. Fact is that the dollar index is currently oversold according to the RSI, and also a few other indicators, while a lot of other currencies are heavily overbought. The first one to drop off a little bit, I've mentioned this on Twitter a few days ago, that I saw possible head and shoulder formation forming in the British pound, and the British pound did definitely drop a little bit on on Friday. Now the chart that I was referring to here is the S&P 500 is showing as overbought from an RSI point of view, made higher highs. Stochastic looks like it could be rolling over. Now there's a pattern here. OBV still looks very strong. Materials overbought on the RSI, made new highs. RSI rolling over. Then we have energies overbought on the RSI, made new highs, rolling over stochastically. Financials almost overbought. Once again, stochastics going sideways right now, but definitely on the overbought side, could be rolling over. see how that goes. Industrials were really overbought and are again rolling over stochastically. Technology, which was one of the sectors that really led things in the beginning, um, going sideways stochastically right now. Then we have a consumer staples, again getting into the overbought section, and this one is still pointing up. Then we have utilities, again making new highs. Stochastics could potentially be rolling over here. Weak on the OBV. The OBV is actually pointing down here. Healthcare, RSI is pointing down. The stochastics are going sidewards. Again, OBV is looking weak here. And finally, consumer discretionary. Now this is the one that makes absolutely no sense to me. Why it is actually as strong as it is, but even it is rolling over. But realistically, in a recession, consumer discretionary is not supposed to do this. Consumer discretionary is supposed to point down, and consumer staples is where the strength is, because people still need to buy the staples. They do not need to buy the luxuries. Just goes to show that the market really does not make a lot of sense and is driven mostly by liquidity and speculation at this point. I've heard several commentators comment on that the recovery as we see it is very far beyond where it should be. We're basically, the stock market's basically reflecting us as we would look maybe a year or 2 years into a recovery. It should not be here. So even if there is not an actual double dip, and I still do expect a double dip myself, but even if there is none, the market is clearly not reflecting the underlying fundamentals. So that can only be that there is simply too much liquidity driving this market up, and seeing that there's nothing really else to buy, the money heads into the capital markets. The question is, will it actually do any good there in terms of jobs, housing, and otherwise? And the answer is probably not. So for now, it's just driving up the stock market, making everybody feel good, but it will not repair the underlying fundamentals, which will need more time to recover, in my mind. And because of that, I continue as I've been before. I continue more on the short side than on the long side, even though I obviously do hold longs as well, so I am hedged, but I am more short than I am long. And we will see again. There's a few things that could come about at this point. If the markets, if the stochastics actually do roll over in many of these sectors at the same time, we could see a down move, which could turn into a dramatic down move, and that would be bullish for the US dollar. It would be bearish for commodities as well as the stock market. So we'll have to see. But at this point, it is hard to really know when that will happen. I have been saying that that could happen for a long time. It has not happened yet. I recognize that, and yet I still feel much more comfortable on the short side than I do on the long side, because if and when that does happen, the scenario that I'm talking about, it will happen very quickly in my mind. So that's continues to be my strategy. My oil short, gas long strategy has worked out quite well so far, and option sales have been quite good, because this market has been moving very slowly, and stocks that I do sell options on seem to be going nowhere in particular, which is perfect for an option seller. You want lots of volatility and not very much absolute movement. That way you can resell the same option over and over again, and basically collect rent. So hope you're doing well next week, make lots of money, and talk to you in a week from now. Bye.